In this episode of CEO Insights, I want to give you some of my experience in retail energy and how the volatile wholesale markets play out, especially given 2021. They've been pretty ugly for retail energy. Japan earlier this year had significant price spikes, which caused many retailers to suffer financially. The Texas problem with their freeze, and many of those retailers suffered or bankrupted, etc. And icing on the cake, I guess, is UK. 22 plus retailers have gone out of business. That's not only the price spike, but the regulatory price cap that have caused the inability to sell customers within a reasonable margin. So the survival, one would think, has got to do, of course, with risk management. And you could look back over the many years I've been doing this. You can pretty much count every 3, maybe 4 years, there's going to be a pricing anomaly. And you always see the same pattern. It's really good for a few years. It's really competitive, but yet you can make good margins. And all of a sudden, in a 2-week, 3-week period, bang, you blow up a lot of companies. So that's the nature of the beast. However, the ones that survive through that, and I've lived through 2 of these myself, focus on key things. One is most retailers want to have a price plan at or near the bottom, because the word is they're competing. Yes, you're competing, but more importantly, and many want to provide some kind of savings against utility or a better price than their competitors, that sort of thing. But the focus really should be on profitability. Yes, you want to compete, but if you can't be profitable, there's no point. But you see, when you talk to retailers, one of the first things they tell you is, how many customers do you have? Like, that's some measure of success. I would rather have 3 customers make money than 1 million customers and lose money. It doesn't make much sense. If you can't be profitable and attract new customers and have unique price plans, not necessarily the lowest, you should think about being a different business. But the keys to the profitability are not just price plan. They've been the same ever since I've been doing this. One is what's your cost to acquire customers? We see where people spend a lot of money on either advertising or door to door that's ineffective, if you will. If it's effective, great. If it's not effective, and you'll have a cost to acquire a customer well over a year's margin. And customers, if they stay for a few years, great. That makes sense. The second is the cost to serve a customer. If your operation is inefficient and you need a lot of people to do your business, it's hard to be profitable. And of course, the third is the discipline around commodity risk management. If you're giving customers guaranteed prices or fixed prices, if you will, and you haven't hedged it, you're just asking for, when one of these anomalies hits, to get hurt. So there's a lot more to this, but why don't you talk to us about the strategies and the tactics to achieve how to be profitable, not just in a adverse, volatile wholesale market, but as a retailer in general. Thanks for watching.